Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monte, and this is a one-year daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA. As I zoom in here, you'll see not much has changed since the midweek report. We closed today with a hanging man. Yesterday, we closed with a hanging man candle, which is bearish. We have a drop in volume today. And if you look down below, zoom in a little bit more, we are a hair away from the CCI crossing with a sell signal. So the downside target's still in place, not moving at 411.32. Moving on to IWM, which is a small cap ETF. You can see here that we have a half signal. A half signal is when we have a lower high but a higher low. And we still have that wide divergence from the moving average. You can see down below, again, the CCI is about to cross with a sell signal right there. And even though that's a red candle, we have a slight increase in volume, which is telling us that the sellers are starting to get more motivated. Downside target of IWM is 212.78. Moving right along to the Qs. We're not going to have any changes in the downside targets, but there are some changes here happening with the Qs. Down below, as I magnify that, you can see the CCI is starting to hinge from an upward direction to a sideways move. That's a hinge, not a pivot. Downside target, again, still in place at 464.86. Moving right along to SPY. This is the ETF for the S&P 500. We have a slight hinge, again, downward on the CCI. That's my most favorite right there. We have a negative divergence on the stochastic. And some of you are looking at that saying, wait a minute, isn't that a bullish harami? That is true, just like what we saw back here. But remember, bullish haramis are right 80% of the time when they're found at the end of a downward leg. When are they wrong 20% of the time? Well, you may have guessed it, when it's at the end of an upward leg. We still have this bearish engulfing candle here, followed by a green candle, red candle, green candle going back and forth. You could take the summation principle and look at that and combine all of those candles, and what you'd wind up with is more or less a spinning top. So SPY downside target still in place at 555.58. Now, moving on to the VIX, you'll see that we moved right back to that moving average. Talked about that on Wednesday, as the moving average will most likely act as a support level. It's reversed the role. You see back here, you see the moving average acting as resistance. It broke out of that moving average. This whole area is most likely going to act as a support level. And you have this whole thing as a role reversal, more or less, the same way as we just talked about with the moving average. So role reversals are very reliable. You can count on those as support areas when they're broken. And so if you look down below, you can see that the CCI is in an extremely oversold condition, and the divergence between the K and the D, which is the blue and the red line, is quite wide. And we haven't seen that since back here in August. So that is the market analysis. Again, not much changing from the weekly market report from last week. Downside targets are still in place. Upside target on the VIX is still in place right here. Upside target right there is 26.68. The big news today was silver. Take a look at what happened here. We have a breakout occurring on a cup and handle. And last night during the equity analysis call with our members, I talked about this, showing the cup and handle. And then I used silver, the silver futures market, to show you what's going on here. This is very interesting. If I take a step back and look at the monthly candle, what we have, believe it or not, is a cup and handle within a cup and handle. Here's the cup, here's the handle forming, and what do we have in the handle? There's another cup and handle. It might sound crazy for those of you who don't know price patterns, but this cup and handle is about to break out. And what that means is that we could very well see silver on its way back to record highs at $50. This is a very big move for silver. We talked about this last night. Our members are long silver, at least most of them are long. I'm totally long silver. I'm even long gold and some of the gold mining companies. And it looks to me that is a full-fledged breakout today with extremely high volume down here after a breakout of these highs from earlier in the month. Now, if you're paying attention to what's going on here at Sticky Trades, you'll know I use my 7-point trading checklist. All of our members, including the members that are coming on for free for 2 weeks, have access to this. If you follow along with any of my webinars, I look at stocks, I analyze stocks, I put price targets on stocks using this trading checklist, and it's very effective in weighing the evidence between the bullish and bearish signals. Now, there's a lot of news coming out. We're getting closer to Election Day here in November, and the biggest thing on voters' minds is still the southern border. You may have seen some of the interviews that have been going on. Each one of the reporters are bringing this up. The southern border is the number one concern for most Americans, and you can understand why. It's costing taxpayers tremendous amounts of money to provide housing for these folks that are coming over the southern border and to provide them with stipends, more or less. They get EBT cards, the equivalent of that, with cash on it. And Americans are more or less fed up with this. It's going to take a toll on our economy as Americans themselves are struggling with keeping up with inflation. And inflation is not going away. In fact, what's happening, stagflation is starting to creep in. Stagflation is the worst kind of inflation because that happens during recessions. In other words, when you have a recession combined with inflation, that's known as stagflation. And you can see here, Bloomberg Finance has put this out. We are at levels that we haven't seen in 4 years. And these are the fears of delinquencies occurring. You see, so when you have stagflation, when you have tough economy, people fall back on payments. They have a hard time keeping up with credit card debt. And so delinquencies creep in after that. And then after delinquencies, you generally see bankruptcies. So stay tuned for more reports on that. Looking at consumer expectations, they have fallen to a low that we haven't seen in 11 years. This is according to University of Michigan. You can see that the expected financial situation is looking pretty grim for consumers. Now, this is very interesting. You could see that the full-time employment rates are dropping. Year over year, the percentage and change in employed full-time jobs is dropping, and you can see this is a 100% accuracy in predicting recessions. And you might wonder, well, if it's crossed down below the zero line each and every time right before a recession, what's going on right now? Well, we're in election year, folks. I believe that we're already in a recession. They're just not going to use the R word until after the election is over. And then I think you're going to see all hell break loose. I think you're going to see more accurate numbers coming out. And then we'll see the markets respond to that as well. Again, that's my opinion. I certainly am not the only one that holds that opinion that we're already in a recession that's not yet being reported. But we'll have to see how that plays out. U.S. mortgage applications have dropped by 70% over the last week. This is the most we've seen since April 2020. And at the same time, the refinancing index fell by 26.3%, posting the biggest decline since March of 2020. Again, this is put out by the Mortgage Bankers Association of America. It's a very accurate report. You could see here we haven't seen this in a very long time. Following up on some of the geopolitical news, you may have seen it already, but the U.S. is deploying troops to Israel with the THAAD systems. And on top of that, stay tuned next week from the 22nd to the 24th, the BRICS Conference is taking place in Russia. This is current news. A BRICS currency could shake up the U.S. dollar's dominance. And when you look at that, what happened just 4 hours ago from me hitting the record button here, Putin confirms that BRICS will explore a digital currency for investment development. And on top of that, this is taken right from the BRICS website. They are now eyeing the creation of a central bank for such currency issue. Now, this is going to be direct competition to the International Monetary Fund, BRICS will be able to loan money in a digital sort of way. And as the BRICS nations build their alliances with other countries, particularly in Indonesia, you have to watch this one because we have trading partners here that are about to join BRICS. And the BRICS nations represent almost one half of the global GDP. So there is a powerhouse forming here. The U.S. is doing absolutely nothing to hedge themselves against this. We are seeing a short-term rally in the dollar, but watch what happens when they start de-dollarizing and removing the dollar as the world's currency. This is going to put a hurting on us as Americans, because you're going to see inflation go through the roof, as now oil will be priced in other forms of currency outside the dollar, but we'll still be paying in dollars. So the inflation could reach levels that we haven't seen in our lifetime. A special thanks to those who are contributing money. We have Steve joining Vic from last week, and Vic came in again with Eric, and they're donating small sums of money here. We really appreciate that. But as I mentioned to Steve, this month, for the rest of this month, anyone who does such a thing like this will be matched 4 times over. So in other words, if you donate $5, I'm going to put $20 towards it. And we're going to go to some of the local churches here to help with the hurricane relief that's been going on here in Cedar Key. Thank you so much, folks. We really appreciate that. Stay tuned to Sticky Trades. Please like and share and comment. And I will be with you next Wednesday for the midweek report. Take care.